leaves a bit of bad taste in mouth. Well, Sudhir Singh, CEO of NIIT Tech, now joins us on the show to discuss those numbers. Sudhir, good afternoon. Where did that dollar revenue number of 4.6% come from? And is this a number which is sustainable, or you think it was a bit of a one-off?
So a very good afternoon to you as well. I think that number of 4.6% and the constant currency revenue growth that we've indicated is 4.3% quarter-on-quarter growth is a number that's come on the back of a few things that we've been calling out, right? There's been significant leadership augmentation. There has been a material push around driving growth vectors across the organization. And the 4.3% quarter-on-quarter growth that we've recorded this quarter is a number that we are both pleased with. And it's a growth story that in the short, medium, and long term we think is clearly sustainable.
Okay, so let's get some more details in this, Sudhir. The contribution of digital has gone up as well, and I guess that's where the margin improvement is also coming from.
That's right.
As we're looking at FY19, what kind of growth do you see ahead? I mean, broadly speaking, I know you don't give guidance, but is FY19 going to be an even better year than FY18 for NIIT Tech?
Well, I think great question, great comment. As you know, we don't give a guidance, but at the end of the last quarter, when we had our interactions with the analysts, I had clearly called out that we expect that we are planning to grow at least double digit in constant currency terms around our organic business. Now, given what we've seen in the last quarter, the 4.3% quarter-on-quarter growth that we've already recorded, that confidence level for it has become strengthened. So we feel good about where we are. We feel very good about our order intake, which is $145 million in the last quarter. That, again, you will notice is a step jump up from the numbers that we have traditionally been churning out. So the order intake is good. The guidance, confidence strengthened now.
So are you adding some new clients as well, or is this from the existing clients?
We've actually added 7 clients, and interestingly, almost all of them, 6 out of the 7 from the Western markets. That's point one. And not only are we adding clients, if you look at the large deals, one of the 2 large deals that we've declared in this quarter is actually a new client who has come in with a large $35 million managed services contract. So not just adding large new clients, we are adding new clients and good numbers of them. That number over the past few quarters has doubled. More interestingly, the big change for us this quarter is a large deal, $35 million TCV order has come on the back of a new client, a new logo that's been added.
Okay. Now, obviously, your outlook on the headline growth is very, very promising, as you're saying that you're quite confident that double-digit growth is possible in constant currency. What about the margin profile? As you keep scaling up on the digital side, should we expect significant margin improvement this year?
So just getting back to that growth number that you said right at the outset, no guidance, but that's the plan, and we feel confident about the plan now. On the margin front, we expect the margin to go up. I can't give you a hard number there, but with digital engagements coming in, we do expect margin profile to climb up further.
But can you at least give us sort of a timeline? By when will this sustained improved margin profile be visible? I mean, are we talking first half of next year itself?
So you look at us, honestly, you've seen us over the last 4 quarters increase our margin every quarter. Quarter 1 for us was 15.6%. This quarter, the results that we've just declared are 18% operating margins. So I expect the margin trend, obviously there is seasonality in margin that comes into play, but we expect margin to grow. And obviously revenue, as I shared the plans with you, is an area that we feel good about at this stage.
Okay, Sudhir, just a quick word on different verticals for you as well. I'm looking at the breakup that Rima shared with us. So financials, I mean, BFSI is slightly lower, it's still down 1.5%. Insurance has actually done very well for you. As a geography, I think Americas are up about 0.5%. What do you see ahead when it comes to financials and the North American geography?
So I actually see a pretty good demand intake coming our way, and I'll tell you why. For us, BFS is in some ways almost a surrogate for the capital markets buy side. Most of what we do is on the wealth and the asset management side, and the demand that we are seeing in the market right now is extremely positive. We see orders coming our way. That's reflected in the order intake as well that I talked about. When it comes to insurance, that story has already picked up. Insurance as a sector, especially in the States, was a sector that's been slightly late when it came to jumping onto the digital bandwagon, but they seem to be there firmly right now. And as I look at the financial services space across insurance, across BFS, and for us, that's wealth and asset management, we feel good about the pipeline, we feel good about the budgets.
All right, Sudhir, it was good talking to you. Thanks a lot for your time today, and wish you luck for FY19. By the way, just see the intraday chart of Balrampur Chini. I mean, this is what the problem right now with sugar stocks. Every time they're rallying, there's intraday decline. And just look at that move on Balrampur Chini.